Hello everybody. This morning I'm going to focus on two markets, which are government bonds and stock market indices. And we are going to look at these markets in two countries, US and Japan. So if I start with the government bonds, as I already discussed numerous times, the trend has now turned quite bearish on US bonds. Which means higher bond yields. We can see that easily on the chart. And what we saw a month ago is a new breakout attempt above the 3 area, which was a key long-term juncture, so key resistance level in the long term. And as you can see, the potential confirmation of a major double bottom formation over almost 10 years. So less than 10 years, but 6 to 7 years. So what we are seeing right now is a confirmation of this long-term trend change with yields, US yields breaking above the 3% area. If I now, another chart I showed you earlier is Japanese government bonds. So Japan bond yields are also breaking out. So you can see a perfect breakout earlier this year, then a pullback on the former resistance line, and a confirmation of the trend change, which suggests that Japanese bond yields probably hit a major low in 2016, which will not be retested, and are likely to move higher in the medium term. So I think we are not going to see negative yields again, even in the long term. If I look at potential targets according to point and figure charts, so that's a chart I discussed a few weeks ago. This is the point and figure chart on US 10-year bond yields. So as you can see, I can easily justify significantly higher yields according to this chart. The next target, this is an horizontal target, is around 3.5. And in the long term, I can even justify much higher yields. Let's say with a cluster of target, the next one around 4.80. So from a technical point of view, a significant trend change, not yesterday, not last week, but in early 2017, and a potential continuation of this trend change. So if we now look at Japanese bond yields, a similar outlook. So as you can see here, according to point and figure chart on Japanese 10-year bond yields, a next target at 0.24, then a cluster of target around 0.45. If we now switch to equity markets, so we can see that the S&P is still very close to all-time highs. It almost reached all-time highs this week. This is something the Dow Jones Industrial did, so new highs on Wednesday. So the big picture of the S&P 500 remains positive. However, I think the index is now at a critical juncture in the short term. As you can see, there has been bearish divergence forming on the RSI, so this is a 14-day RSI. And we can see that the RSI has not hit new highs since late August. And as you may remember, I discussed the Russell 2000 last week. So as I told you, this one is starting to show real signs of weakness. And I think it shows that market breadth in the US is also deteriorating. So that's, I think, an indication that the index will probably continue to consolidate in the near term, possibly to 2850, which is the first support zone for a deeper setback. So I think the index can go back to this level, knowing that another important support, which is the downside risk in the near term, is around 2800, and you have also the 200-day moving average at 2760. So although the trend is still positive, a slightly toppish market. If we now look at the Japanese stock market, I see I'm much more positive on the Japanese stock market. As you know, the Japanese stock market made a significant breakout a few weeks ago, which is quite encouraging and suggests that the index is resuming its uptrend, a bit like what we saw during the second part of 2017. So overall, the technical outlook is still strong, and as you know, I mean, higher bond yields moving back into positive territories is very good news for Japanese stock market. It shows that we don't have deflation fears anymore, or at least the risk of seeing a major deflation is declining sharply. So I see that as positive event for Japanese equities, and I don't even talk about the dollar yen, which remains right on a resistance right now around 114. But that's more or less in line with what we are seeing on the stock market with overbought conditions here last week. So I think we are due to start a setback, then after that back up again. If we look at the point and figure chart on the Nikkei 225, as you can see, a very bullish outlook also. This is a chart I commented, I think, a few weeks ago in this video. Triple top breakouts with a first target 25,070 points. Then after that, even a cluster of targets close to 28,000. Have a very nice trading day.